heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow out here in San Francisco. This is Bloomberg Technology.
Coming up, Amazon, the latest to show love for AI. In Andy Jassy's annual shareholder letter, the CEO pledges to keep investing in such growth areas despite cost-cutting initiatives.
We're going to dive deep into the world of crypto as Ether tops $2,000 after its software update went off without a hitch. John Wu of Ava Labs joins to discuss.
Plus, how does a 4-day work week sound? We'll speak with Nobel Prize-winning economist Christopher Pissarides, who says AI may increase productivity so much it'll shave a day off your weekly work calendar. But first, let's get in on these markets. Let's look at some risk asset love as well, it seems to be across the board. Why? Because actually some of the economic data, the macro data, is showing a little bit of softness. Maybe the PPI producer prices showing a little bit of cooling on the inflation front. We're also seeing the jobless claims tick up a little bit. Bad news becomes good news when it comes to the hopes that the Federal Reserve won't have to hike so fast. NASDAQ up 1.5%. All country world index also up 0.8%. So we're seeing money going into equities in Europe, technology stocks also in Hong Kong, a reprieve after we'd seen some days of selling. Bloomberg dollar index is also on the downside as many start to perhaps push back on some of the worries that the Fed will have to hike more than 25 basis points. Let's move on and see what's happening in terms of other risk assets. Of course, I'm going to shine a light on what's happening in the world of crypto. Ed, we were just talking about it. On Bitcoin, we're up 1.6%. Also in Ethereum, you're pushing higher, up more than 4% on the fact that its upgrade seemed to go pretty smoothly, Ed. But dig on to some of the micro movers.
Yeah, I mean, Bitcoin touching that near 52-week high is definitely boosting crypto-related stocks. You look at names like Riot and Marathon continuing to make gains as there's this feel-good around the digital tokens themselves. Some other movers, Warner Brothers Discovery, now actually up 1.4%. There'd been this really muted reaction to their big max strategy outlined at a glitzy event 24 hours ago. Analysts kind of a little bit tepid on it, but that stock moving higher. And Micron getting a street high from New Street Research. There's a lot of, I guess, optimism around the memory space, especially after Samsung pledged to cut back on production levels to rebalance supply. A big name and a big outperformer in the market is Amazon as well. You look at the gains the stock has made. It took it a while to get going after they introduced 2 new large language models. We're going to talk a lot about this throughout the day on Bloomberg Television, but it's focused pretty firmly on cloud customers, a tool for generating text, but also a sort of platform to foster an ecosystem of AI. That stock up 0.8% on a 2-day basis, but really jumping higher, Caroline, in this early trading of Thursday's session.
Yeah, and the Titan announcement all came within a focus from Amazon CEO Andy Jassy on, well, where they're going to be investing. It's his second annual letter to shareholders, and he really did pledge to keep putting money into big long-term bets despite those cost cuts and an uncertain economy. He's moving ahead with a global expansion, looking at efforts to become a bigger player in groceries and healthcare, and of course, there's a generative AI part. Let's talk all of that with Bloomberg's Spencer Soper. Let's go to the old school Amazon, and they might say that AI is old school for them too, but let's talk about groceries, let's talk about e-commerce. I mean, where are they looking to expand there?
On groceries and e-commerce, just because they're such huge consumer spending categories, and it's not really new. Amazon's been trying that for a while now. Groceries more than a decade, and then they had the big Whole Foods acquisition several years ago, which has kind of fallen flat. They've got this new iteration of a supermarket they've tried. They tried Amazon Go. They've had a lot of false starts on it, but it's still just such a huge spending category. And then it dovetails nicely with healthcare, particularly pharmacy. And Amazon's trying a lot of the same old tricks that other big retailers try, like, cheap prescription drugs. Everybody and his brother does that. So it's not really differentiating, but they remain important targets for Amazon just as a way to grow revenue because there's so much money spent in those areas.
Spencer, the commentary around AWS was really interesting. This has been the cash cow for Amazon, and yet Jassy points out the short-term headwinds, the challenges facing AWS, and then gave us this kind of long-time horizon of how well it can do over the next decade.
Yeah, and he was definitely trying to fleck back to history where Amazon faced difficult economic conditions and prevailed. Made the hard decisions, made tough choices, but still came out at the end of the tunnel. And I think trying to emphasize that Amazon is still a strong company that can emerge through this through a downturn and come out stronger on the other end. And it's really the one area where he can kind of gin up some excitement and enthusiasm. That's really what he had to do with this letter. The stock's down, about half, nearly half from its pandemic highs. That rips, not just investors, but also employees who get a lot of their compensation by the stock value. Then also all of the cuts have deteriorated morale. So he's got to, it's a heavy lift for him, but he's got to do something to try to energize this company right now.
And at the end of the letter, he tries to do just that with the focus on artificial intelligence, trying to remind us that for decades they've been looking at machine learning, they're looking at chip investment there. But just talk to us about the large language models that are being offered and what makes it different, because it's not a chatbot.
Yeah, and I think what Amazon is really trying to say is, listen, if you look at the history in the marketplace model, they just kind of want to be in the middle of it. Amazon wants to position itself as a marketplace where you go to access these tools, and as long as it's got people coming for those tools, it's going to get the best tools that people want exposure to. So I think it's really looking to make itself a marketplace for ideas and a conduit for these ideas to be utilized.
All right, Bloomberg's Spencer Soper out of Seattle. Thank you. And stay with us on Bloomberg Television. We have a conversation later today with AWS CEO Adam Zalipsky that you don't want to miss at 2 p.m. Eastern, 11 a.m. Pacific. I've been speaking, Caro, to some AWS customers this morning. We certainly have some interesting AI-related questions to put to him.
Yeah, I know you're going to do a great job on that. Can't wait. That exclusive conversation. And staying with Amazon for a moment, Ed. Jeff Bezos, of course, the founder, no longer plans apparently to bid for the NFL's Washington Commanders. The Amazon founder has long been seen as the clear frontrunner to own the franchise since, well, Dan and Tanya Snyder said they were exploring options, including a sale. Spokesperson for Bezos declined to comment. And another key story that we're following, SoftBank moving to sell more of its stake in Chinese internet giant Alibaba, unwinding that initial bet that spurred Masayoshi Son to really take ambitions to invest billions of dollars into other startups. Joining us, I'm pleased to say for more, is Isabel Lee. And why sell out, and in what way are they selling out?
So this is really interesting. So SoftBank is looking to sell majority of its stake to China to really trim of Alibaba to trim its stake in China and to raise a fund. So this is quite a move, because from holding a majority stake at one point around 34%, they're whittling it down to 4%, 3.98 to be exact. So this year they're looking to sell $7 billion worth of shares. That's following last year where they sold around $29 billion. And the important thing to note here is that these are prepaid forward contracts, which means that they could still buy back the shares. But from the previous deals, they just didn't hold on to those and just sold them.
And Ed, this all comes at a time that the Vision Fund bet, the bets on startups for SoftBank just haven't fared that overall business well.
It's why the market's interpretation of this is so interesting. It says something about China and investors' exposure to China, but it also says quite a lot about SoftBank, right, Isabel? What do we take away from this about how SoftBank's having to maneuver, given the losses that it suffered from its startup bets?
So this is really quite a pivotal moment, because you're right, there's so many things at play here. First, for SoftBank, they lost a lot of money when they were investing a lot of money in Vision Fund. And as we know, a lot of those startups are now fledgling companies. And SoftBank said that they want to exercise financial prudence. They want to just cut back on risks. And they also want to raise money for the chip-making design firm they're looking to take public called ARM. But at the same time, this comes at a time when Alibaba, the 200 billion giant, has broken down into 6 units, 6 baby babas, as some people have called it. But we don't know how that's going to play out, because clearly there will be favorites. For instance, Taobao, that's a crown jewel of Alibaba. Likely that will do well. But what about the others? So there's so many factors at play here. China is now looking to really be more friendly to entrepreneurs. But then who still knows? I mean, this comes after several years of intense crackdown on Chinese tech giants, Alibaba included.
All right, Bloomberg's Isabel Lee on the China Tech Beat. Thank you. Let's turn to a story that we continue to follow. A San Francisco city official has tweeted this morning that an arrest has been made in last week's San Francisco slaying of Bob Lee, chief product officer of crypto startup MobileCoin. The arrest was made early this morning in the nearby city of Emeryville. According to Mission Local, Lee knew the suspect, who also works in tech. However, the outlet did not state where it got that information. San Francisco police representatives didn't immediately respond to our requests for comment, and a spokesperson for the city's district attorney declined to comment. We will continue to track what is a developing story. This is Bloomberg.
Let's talk crypto. Let's talk ETH right now. It topped $2,000 for the first time since August after a widely anticipated software upgrade to what is the most commercially important blockchain went pretty according to plan. And worries of those initial rapid outflows seem to be proved unfounded. We'll see up more than 5% as we speak. John Wu, president of Avalabs, building smart contracts platform Avalanche, is with us. Always great to have you in the house.
Always nice to see you, Caroline.
Let's talk about what this upgrade means. I know that there's interoperability with ETH and your platform that you're building. Is this going to help yet further just build back a little bit of confidence in the space?
A little, yes. I mean, it's a fantastic thing in the sense that going from proof of work to proof of stake basically decreases the energy requirement to run Ethereum. The short-term relief is basically, it went without a technical glitch. And there was not as much selling of ETH after this. So that's why Ethereum's breaking through 2,000. And the whole space is actually, frankly, doing decent. But it's important to understand why it's doing so well and who's buying it and that kind of thing.
Yeah, because this is where we get the distinction between Bitcoin, which generally is just an asset and meant to be a store of value, then got ETH, which the hope is around smart contracts, the hope is around adoption. But is that going to become an obvious use case right here, right now? Because we all wait for the killer dApp and it doesn't come.
That is a use case for people in the crypto ecosystem. In order to get yield now, they can stake their Ethereum. So that's very positive for in Ethereum, in crypto asset people. In fact, a lot of this rally we've seen in the last year to date, so to speak, it's been a better asset class than any other asset class, even tech stocks, is because it's been driven by on-chain people, crypto natives, and also international people. It's not so much that new money or that institutional adoption. Interesting.
And naturally, it's all about, well, teasing out potentially future international and institutional adoption. At the moment, Ed, there's an NFT week going on here in New York, and there are plenty of people focusing on the upgrade. But were you doing some sort of watch party out there at SF?
No watch party for me. For context, John, 24 hours ago, Kate Lawrence of Blockcelerate was on. We're talking about how, for the industry, right, amid all of the volatility in the pricing of certain tokens, people still watch these technological updates. My question is why? Why is it such a key moment for an industry to track the underlying technology that powers those platforms?
So earlier I just said that the rally has been driven by native crypto people. And in my opinion, for this asset class to continue to grow in price at least, you really need institutional buyers to come into the space. And for real institutional buyers to come into the space, you need real utility, real world use cases. And you're seeing that, one of the big things for NFT NYC this time around versus last year is that although there are fewer people here, there's quality brands. A lot of brands are coming to see how the NFT construct can help them with their loyalty plans and loyalty programs and also increase engagement. So you're seeing some real use cases and discussion of building real things for big brands.
John, when last you were on with us, it was the afternoon that SVB collapsed. And you were going to come on and talk about what we're talking about right now, and we got sidetracked. And of all the volatility in recent weeks in markets, the industry's access to funding, what are you seeing in New York City among that NFT conversation? Is that a marketplace that's back on track and that people are kind of optimistic about investing in?
So you're not seeing the OTC markets or the on-ramps like fiat, like through Coinbase into the crypto ecosystem really picking up yet. They are still hesitant. But the excitement inside the ecosystem of crypto has been reinvigorated. Most of this price rally, people don't realize, happened right after SVB. It was a reminder to the crypto native people as to why they got into this space originally, the mistrust they have for large institutions. That's why Bitcoin became very popular after 2008. And because of that reminder, I think it reinvigorated the crypto native community.
We saw a lot of uptick in Bitcoin and ETH, maybe not so much the altcoins, John, but talk to us about your own initiatives right now, because you say there's utility, there's purpose, big brands. Well, you've got some key financial players coming on to try and understand how they can use blockchain technology, right? Name some of the people and what you're really building.
So from what I'm seeing, especially in the U.S. asset managers, they want to be involved in the space, but they're hesitant. They're not sure of the regulatory framework, and they need to learn the technology better. So this is why we announced yesterday a project called Spruce, which is a public blockchain permissioned only by the KYC, KYB, AML functionality. We're doing this in part with Wellington, T. Rowe Price, and WisdomTree. What they're going to experience is the ability to see the power of execution and settlement in real time, the cost savings of putting this in this system together, and it's a safe place because it's a token valueless transfer, so it's a test net, but they will be able to experience an institutional DeFi component. No one's been able to do this so far, and this is going to be the first time they can really explore DeFi.
John, I get what the Spruce testnet offers to both the buy and sell side in terms of access. You're a businessman. I'm actually quite curious about how you make money off this model. What is the business that you've created here?
Well, first we have to create adoption. And this is the first step towards adopting this. So Alibaba Labs is a software technology company. At some point, we will provide services no different from AWS for things in the cloud. Instead of storage and compute power services, we'll be providing different features and tools for developers and for places like Wellington or T. Rowe or WisdomTree to create their own applications, for them to create their own AMM or their marketplace, for them to create their own lending, borrowing DApp. And right now, we've gotten partners in the applications, and we've gotten the traditional institutions to try things out and see what DeFi is all about.
John Wu, Alibaba Labs, good to catch up. Thank you for coming back on the show. Now, coming up, in an effort to reduce its reliance on China, Apple is putting India in the spotlight and tripling production in what's now considered the world's fastest growing smartphone market. Caroline.
Stick with India, because we're also watching shares of Infosys. Sales outlook look pretty disappointing, Ed. It really underscores just how clients are tightening IT budgets. They're trying to weather this economic slowdown, as you see, off by 10% in the last couple of days. From New York and from San Francisco, this is Bloomberg. Time now for Talking Tech. Trucking startup Trailer, well, it's winding down its business in Pakistan and stopped taking new orders last month, that's according to sources. Now, this is the Egypt-based platform that connects shippers to carriers when it's looking to exit an economy that's going through one of its biggest crises. Meanwhile, US purchases of machines from Taiwan to make computer chips, they rose to a record high of 71 million in March. That's as the Biden administration here is working to reinvigorate the domestic chip industry. Taiwan saw its US exports rise more than 42% in March from a year earlier. It's all according to data from the Ministry of Finance. And Apple assembled more than $7 billion worth of iPhones in India last fiscal year, tripling the production there after accelerating a move beyond China. Now, the iPhone maker now makes almost 7% of its phones in India, according to sources. And Ed, we're going to stick on that theme.
Yeah, it's a really key piece of reporting in an ongoing situation for Apple. Let's bring in Anurag Rana, senior tech analyst at Bloomberg Intelligence. So, in short, Apple is building more iPhones in India and exporting more iPhones in India. In your fundamental analysis, what's the net result for Apple financially?
Yeah, so, when you look at it, I think it is more of a supply chain issue than financial because, frankly speaking, the best supply chain is in China. It's taken about 20 years to build that. So they build it anywhere outside. It's going to be slightly more expensive in the first few years. But frankly speaking, when we saw back in November when because of COVID, the iPhone Pro factory shut down, it did have an impact on them financially. That too, plus the ongoing geopolitical tensions between the U.S. and China, it is in the best interest of Apple and Apple shareholders that they diversify the supply chain outside of China to other regions, whether it's Vietnam, India, Mexico, almost everywhere, I would say.
Anurag, what about the end user in India as well? It's not only about supply from there. Is the demand there that they want to satiate to?
Yeah, I think this is one of the most fun things you look at it. If Apple's install base in India is so small compared to the population, which means it is going to be a very big growth market for them over the next decade. They're opening a store next week in India. And, we have looked at some numbers. So if there are about, let's say, 600 million smartphones in India, Apple only plays in that 10% of the market. I mean, they have a very small market share, not even 10%. Their market share is minuscule. Less than 5% of Apple's iPhone revenue comes from India based on our work. And I think this is a big growth opportunity for them in the coming years. And largely because as the middle class in India, becomes richer and is more affluent, they're able to afford a luxury product like Apple. Currently that market is dominated by Android.
We also have reported that local regulations require, components sourced and supply chain sourced within that nation. Apple seems to be kind of rethinking its global strategy right now. When it comes to India, how quick does that ramp in market opportunity come? It seems like this is a long-term project, right? Yeah.
It is going to be a long-term project because, as you can think about it, if 90% of the iPhones are under, let's say, $300, $400, I shouldn't say iPhone, but 90% of the smartphones are under $300. Apple doesn't play in that market, so it can't even tap into it. But it's as that middle class becomes more affluent, they are richer, the per capita income goes up. And I think that's more of a 5 to 10 year trend rather than something that will happen over the next couple of years.
Anurag giving us the global perspective. We love it. Anurag Rana, thank you of Bloomberg Intelligence. Let's talk about now WeWork, a venture started by WeWork and a private equity firm, Roan Group. Well, accordingly, it's defaulted on a loan for a San Francisco office tower. Now, the $240 million loan was for a building in San Francisco's financial district, which is owned by funds managed by the venture, formed by WeWork and Roan back in 2019. That was to buy and oversee real estate, Ed.
Speaking of work and working space, there's a lot of concerns that AI could replace some jobs, but it could also make our jobs more efficient. What about a 4-day work week, Caroline, powered by generative AI? Nobel Prize-winning economist Christopher Pissarides for more on this next. Take a quick look at shares of Activision, up modestly in the session, but over the last 3 weeks, up 8%. Analysts getting more and more bullish about the upside in a deal with Microsoft announced a year ago for Microsoft to buy that games maker. Momentum in the stock. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow here in San Francisco. Let's get a check on those markets, Caroline. This is what your technology sector looks like in the equity space. The Nasdaq 100 continuing to push higher, up 1.6%. You've got that kind of softening of data, both on the jobs and inflation front, which is kind of fueling the idea that actually when it comes to the Fed and this rate hiking cycle, we might be nearing the end. You can see outperformance as well in the US listed shares of Chinese technology companies and Bitcoin off session highs. We were at a 52-week high on that Bitcoin, but kind of pulled back a little bit near $30,500 per token. A lot of movement in the single names in the stock market around AI. Amazon pushing higher, both based on the annual shareholder letter from CEO Andy Jassy, up 3.5%, but also the news around their large language models, which I know you're going to get into. Other names gaining C3 AI and some giving gains back. Big Bear down 7%. All of them kind of looking at how to use generative AI tools, but in the enterprise or cloud space, which is where Amazon was really focused, Caro.
Yeah, Big Bear looking to potentially sell more stock in the future, supply weighing it lower. But let's go back to what you were just hinting at, the Amazon news, because it's joining Microsoft, it's joining Google, it's joining everyone basically in the generative AI race, Ed, announcing technology aimed at its cloud customers in particular, as well as marketplace for AI tools from other companies. Now, the Amazon Web Services unit announced not one but two of its own large language models, one designed to generate text and another that could help power web search personalization. But, and it's big but, no plans to release a chatbot as yet. Now let's dig into this whole world of generative AI and in particular ChatGPT, the revolution that basically seems to have opened. Could it actually open for productivity to mean that you and I have just a 4-day work week? Let's ask Nobel Prize-winning Labour economist Sir Christopher Pissarides is with us. Recently said that the labour market could adapt quickly enough. Your work has been so thoughtful about automation, the impact of technology on the way in which we can be productive. Do you think we'd really get to a 4-day work week?
I think so, yes. I think it's feasible. I mean, let me put it that way. If you see the skills or the competences that companies are demanding now, they are most in demand, it's basically down to data processing. Data is the big resource that companies have now. It's data processing and it's communication of that processing to both to subordinates and line managers. Now, when you get a technology like ChatGPT or other language models, you basically have the analysis of that data right in front of you, ready, much faster than humans can do it. Well, that's what we mean by higher productivity. And
Professor,
if we can get the machinery to do it, then obviously then we have spare time ourselves and we have the money because we are more productive at the same time.
Professor Pissarides, we asked our audience if they share your optimism on the impact of generative AI and a 4-day work week. This is what they had to say, the results. 52% of respondents, 53% saying that a 4-day work week is coming soon because of generative AI. 29% of them said not in our lifetime. What is the timeline that you see? Is this a decade out from being true?
I would think so. I would place it at a decade, yeah. I was thinking 2030 maybe, but these things are usually slower. And actually, if I were to recommend it or advise someone about it, I would advise to be slower because it is going to require some readjustments of the things we're doing. I mean, not least about families, schooling, education. You know, I mean, we might have 4-day week in the labor market, but you do have to take into account what happens with schools, for example. Do they also have a 4-day week? What happens with public services? What happens with the people who will work there? You know, it's a complicated universe. But it's feasible, and if there is will, we're going to find a way.
Well, you won your Nobel Prize for work on the impact of regulation on policy on the labour market. So is it regulation and policy that needs to sort of be the cart that leads the horse here?
Yes, the key problem is the combination of good regulation, so it doesn't stifle the labour market, which is basically what I studied for my Nobel-winning work, which we call frictions, and at the same time making sure that it allows enough flexibility to the people to show their individual talents in the labor market, you know, to sort of unleash that talent, if you like, and do the things they're doing best, which in my work I call matching and the quality of matching. So essentially, the way that the labor market will work in the best way is to improve the match between the worker and the capital equipment that worker has, and I would include computers and software as the capital equipment that the worker has. Yeah. And at the same time, make sure that it's sufficiently well regulated, that it doesn't lead to fraud, to abuse of the technology, as I mentioned before. You know, these technologies are very difficult to monitor.
Yeah.
And they are open to abuse, and we need to work very hard to think how to avoid that.
So, Christopher, to that point, I mean, you led a Nuffield-funded review of the effects of automation on jobs. And a lot of the time, there is a pushback from individuals, from unions, from a nervousness of what it means for all of us. We see it in school children at the moment. We see it in people coming through university, people terrified of what generative AI really means for their skill set. How important is it to win hearts and minds and make sure that everyone feels that this actually builds on their skills, not detracts from them or puts them out of work?
Exactly. We need to train people. We need to give better information and show that it doesn't require that much upskilling to ensure that you can have a good job. You see, unfortunately, that comes from two different directions, the way I see it. One of them is that people are naturally conservative and they fear change. If they're set in their ways, we're okay. What's all these new technologies that are going to disrupt us, they're going to make us change. That's the way that unions, for example, especially in Europe, actually, that's the way they look at it. And they try to throw you back. Now we have to educate them somehow. And when we say we have, it's not really so much up to the academics like myself, but also the relevant government departments, the employers, associations, that throughout modern history, technology has changed our lives and it's changed it for the better. I mean, just think if we resisted electricity, for example, now, where we would be. We had so many, if we resisted it, we wouldn't have all those appliances in our homes that have made life so much easier. So that's one direction that is coming. The other one is that a lot of what you read now and what you hear about new technologies is about how many jobs will be lost.
Exactly.
We have 300 million jobs, but they never talk about how many jobs are going to be created because of
look, Professor Pissarides, this is the human tension in the story, right? Will my job be eliminated by artificial intelligence tools? Are there specific sectors, specific areas of the technology industry where you think, generative AI is just going to eliminate the need for a certain role?
Oh, you can think of plenty of those. Take legal assistance. What is a legal assistant? The job may have gone already. If it hasn't gone, it will go already. You basically have a lawyer who needs an assistant to go through all previous court cases, through all those legal books, through all those archives to find all the information that is relevant to your case. Well, now just ask Chat GPT, tell me about such and such a case. What do we know? And you get 3 or 4 pages with all the information that your legal assistant will have got working 24/7 for several days. There are jobs that will disappear, but those people, they are educated, they are highly trained people. They can be more creative than sitting in dark archive rooms going through pages and pages of script.
So, Christopher, Caroline and I have played with many of these generative AI tools. We've experimented using them for scripts in television news. I think both of us are relatively confident we won't be out of the job, at least in 2023. What other areas of the economy is productivity unlocked? Forget about replacing jobs. How does this make money for global economies? Really quick.
Okay. Number one is data processing. If we use these technologies to generate more data, then all businesses would benefit from knowing more about their customer. The famous KYC, know your customer. We can get better information. And if we have better information, we can target our market in a much better way, less time, more productivity, more money. And that's why I'm saying that we're going to have enough money that we can go on a 4-day week and have an extra day on the weekend, which is wonderful. At least from where I'm sitting here, it would be wonderful to have one extra day.
Wow. I think many people think it would be wonderful. London School of Economics professor, Nobel Prize winning economist, Sir Christopher Pissarides, thank you for your time. Now, coming up, we're going to get the pulse on the VC ecosystem in the first quarter of this year with PitchBook lead VC analyst Carl Stanford, who's going to break down the firm's latest reports and data. That's next. This is Bloomberg. Time for the VC roundup. Lottomatica is looking to raise 425 million euros, that's $467 million, for a Milan IPO this year, and it's seeking a valuation of around $5 billion, including debt. The Italian gambling company, backed by Apollo, operates Italy's regulated gaming market. It is also active in online sports betting and slot machine segments. Relativity Space plans to abandon future flights of its Terran 1 rocket less than a month after it first tested the 3D printed vehicle. The company will instead shift operations towards a previously planned larger rocket in hopes of filling a growing market need and better competing with industry leader SpaceX. And bicoastal venture firm Lux Capital has raised $1.15 billion in new funds that it plans to invest in startups focused on science and deep technologies, including biotech and artificial intelligence. It's the largest fund to date and will be called Lux Ventures 8, taking the firm's total assets under management beyond $5 billion. Caroline.
We've got a nice close-up of you there, Ed. A little bit of a technical glitch of ourselves.
Yeah.
Look lovely. Meanwhile, I mean, it's interesting that you talk about a new fund coming from Lux Capital, because we're going to talk just now about VC and perhaps how it's been stifled of late. Kyle Stanford, today's VC Spotlight, is here. He's the lead VC analyst over at PitchBook, which just released its data about the health of the VC ecosystem in the first quarter of 2023, and health being the operative word here, right? How healthy or not healthy is it?
Depends which year you are comparing it to, right?
Yeah.
Comparing it to 2021, it is not healthy at all. Comparing it to any year before that, it's holding up a little bit better than what the data might look like, right? Exits are way down, $5.8 billion in exit value generated, extremely low. That will have impacts down the road. Fundraising was also low at $11.7 billion close in Q1. That will have knock-on effects down the road. But deal count is surprisingly high. We're estimating about 3,900 deals closed in Q1, which is higher than any quarter before 2021. So.
Okay, and so that deal count, where are those checks being written at the moment? I'm not talking sector, I'm talking like geography. Is it, we're sat here in New York, but you're usually on the West Coast. How does it break down from an America and global perspective?
Sure, we're still seeing about 50% of the deal count in the U.S. is happening in San Francisco, New York, Boston, or L.A. Those are by far the 4 largest markets. And San Francisco has dropped a little bit. Only about 18.5% of the deals were completed in San Francisco, which had been above 20% every year until now. So I think that's 3 quarters in a row there. But venture is getting much more diversified in the U.S., right? We've had 4,000 funds close in the past 4 years. Those are in the Midwest, they're in Miami, they're in Austin, they're kind of everywhere rather than just being siloed into San Francisco and New York.
Kyle, there are so many dichotomies and contradictions right now. On a day where Lux Capital comes out and says 1.15 billion in new funds, largest ever single fund, and yet the data shows it's not being deployed. I was at Startup Grind last night. Everyone is so optimistic about early stage pre-seed getting checks written. Why is there this contradiction between the backward-looking data and the vibe right now in this community?
Right, well, I think we have to go back to those 4,000 funds that were closed. A lot of those are going to be small funds, under 50 million, under 250 million, which are going to focus on the early stage. That area of the market is also much further away from, the public volatility that we've seen, or the interest rate hikes that are really impacting the late stage and venture growth stage. So optimism is coming back to seed and early stage. I think this quarter, or Q1, was the highest median valuation at seed that we've ever seen in our data, at $13 million, which is extremely high, and double what we were seeing even 3 years ago. So there is optimism at the early stage, especially because it's so far away from kind of the public market and the problems that we're seeing at the late stage.
Kyle, you seem like a glass half full kind of guy. Let's go to the world of crypto and talk about your report in the plunge in funding back to sort of 2020 or pre-2020 levels. What's happening in that sector?
Well, again, I think crypto was the industry of of the market 2 years ago, right? Everything was happening through crypto. It was Web3, it was blockchain, it was everything. That has now shifted over to AI. If you're an AI startup and you have a novel use of a technology for generative AI or some other AI technology that can increase the efficiency of these companies, that's where investors have shifted their focus now, right? Again, looking for the emerging technologies that they can really ride the tailwinds on for the next few years until the market comes back.
I guess, Caroline, my point is that on the ground, there's energy and optimism across all these spaces. John Woo earlier was in New York for a reason, right? He's having meetings talking about a very specific section of the crypto market. I mean, what are you hearing out there on the East Coast?
Well, I'm hearing about a load of invitations that are going around the block at the moment because it's NFT NYC and everyone's got a various event to go, and we've still got big VCs, companies willing to put money on and to work, to entertain, to bring people together, to talk about growth. Carl, what's interesting for me, and I love your take, is whether you can tell us about the pool of capital going towards diverse founders or not, because we know that the NFT space is largely built by guys. Are we seeing women, people of color, managing to get checks in this environment?
We're still seeing female founders, not raise nearly the amount of capital that we would like to see, or we'd hope to see with all of the talk and narrative around, getting more checks to that, those founders over the past few years. But when you kind of zoom out further, there is a lot more money going to those founders now than we have seen, 10 years ago or even 5 years ago. The past few years, there have been, quite a few women who have started their own funds who are, focusing on women founders and helping get money to that area of the market. But it just hasn't happened as fast as, we would hope.
I guess, what is the prediction, the outlook, the forward-looking nature of all of this, Kyle? There's discussion around a mild recession in the back half of this year. How does that manifest itself in private markets and for the world of startups?
Sure. I mean, what we're looking at really from that perspective is that late stage and venture growth stage of the market. There's a huge number of companies there. I think we pulled a stat that showed that the number of companies that are privately backed at the late stage has has more than doubled in the past 5 years. That's a huge number of companies that need a lot of capital, and a lot of that capital that is coming from hedge funds, mutual funds, private equity funds really built up the deal value of the past few years. They've gone away. So that area of the market, without the exit opportunities that they really need to release the pressure of the venture market, they're in for a very struggle year, or long struggle until that money is able to come back and get the money they need to grow.
Carl, great to have you in the house here in New York. We thank you for it. Carl Stanford, lead VC analyst over at PitchBook. Meanwhile, there's some breaking news coming from Sportico that there is now a deal to buy NFL's Commanders, and it is Josh Harris who's leading the group that are going to be a $6 billion deal, we understand. It's all according to people familiar, being reported by Sportico. Harris and the Commanders owner, Dan Snyder, they're hoping to execute the contract in the coming days, we understand. It's not just Harris who's behind this, of course, from Apollo days, but we've got billionaire Mitchell Rales, but also NBA star Magic Johnson. Meanwhile, coming up, new information coming out about the person behind one of the largest leaks of classified military documents in a decade. It's according to the Washington Post, what the White House is saying about the social media platforms that may have shared the intelligence. This is Bloomberg.
An Air National Guardsman is being sought by US agents on the intelligence leak. That, according to a person familiar with the matter, who says Jack Teixeira is the focus of the documents leak. Bloomberg's Emery Horndon joins us now with the details. AMH, what do we know?
Well, there's just a lot of reports right now about this is the individual, as you mentioned, 21-year-old National Guardsman. The reports are that when these leaks happened, he was stationed at Fort Bragg. And there's still a ton of questions, though, that are out there. One is how and why this individual had access to these documents, and the documents that were posted on this Discord chat app months ago, actually, they have marks in them. Clearly, they were folded. So how did this individual get access and post these documents online? Is going to be one of the biggest questions, obviously, facing this investigation. And also, of course, are there any more leaks actually out there? Because remember, this happened months ago, and we're only finding out some of these stories. And for intelligence officials, it's incredibly concerning because they're worried that potentially some of these documents have insight into how the U.S. gathers intel. Interesting, though, earlier this morning, as Biden is in Ireland on an international trip, he said that they were, quote, getting close to this individual, and we could end up with an arrest today.
Anne-Marie really bringing it to us. And, of course, there is a deep technology element to all of this and the way it was distributed across Discord. We want to thank you for bringing us the latest. Bloomberg's Anne-Marie Horndon. Meanwhile, that does it for this edition of Bloomberg Technology, Anne.
Yeah, look, we have a really key conversation coming up with the AWS CEO. I want to get into the detail around what generative AI is going to do for Amazon. So much to recap, 4 days in, almost the weekend, busy day in markets. Don't forget the podcast. You can get the podcast for the show on the terminal, Apple, Spotify, iHeart, wherever, Caroline, you get your podcasts.
Yeah.
Big show.
Big show, and more to come with your interview that's coming up 2 p.m. in New York time. And of course, the CEO of Amazon Web Services. We can't wait for it. We're going to talk much more about generative AI across the shows today. From New York, this is Bloomberg.